What's going on, guys? Today I'm going to talk about two ride sharing stocks, one being Uber and the other being Lyft. I'm going to talk about what policy changes are coming that can impact both of these stocks and whether or not I will be buying Uber or Lyft stock. So let's get started. First, let's talk about the smaller of the two companies, Lyft. Lyft is currently down 5% today due to the fact that their earnings guidance and forecast was pretty bad. They did beat earnings with an estimated of negative 99 cents, but in actuality, it was negative 86 cents. As you can see, they are not profitable yet, but that's okay because as long as they keep on growing, the path to profitability will be there. So, Lyft. So, as you can see on a 1 month chart, Lyft is around break even. 3 month chart, Lyft is up 10%. 1 year, it's down around 50%, and 5 year from its initial IPO, it's down around 60%. So, what went wrong with Lyft, and why is Uber not as much down in comparison to Lyft on their 5 year chart? Reason being is that Lyft is only in one area, it's only in ride sharing, while Uber is in many, many other areas. We have Uber Eats, we have Uber Helicopter, we have even Uber Kittens in Los Angeles. So, around 35% of the revenue does come from ride sharing. But in the past quarter, Uber reported substantial more revenue coming from other services that Uber provides, like Uber Trucking and Uber Eats. So personally, for me, Lyft is not a bad buy. Honestly, if we start recovering, you're talking about, a lot of upside. You're talking about 80+% upside. If it does get back to 72, that would actually be above 100%. That would be great. But my thing is, can Lyft survive through the coronavirus? And that answer is yes, they can. They have cash on hand. We just have to see how long can Lyft sustain this negative downturn of coronavirus. If Lyft does go below $20, I will be considering to buy the shares. I have bought shares at around $18. I've only bought a couple of shares, but it's a position to begin with. I'm excited for both companies. Now let's talk about the bigger one, Uber. As we can see, Uber is also around $30 a share. It's down around 1.2% on the daily chart. They have not had earnings yet. For their Q2 2020 earnings were better than expected, with the average of a negative $73 per share, with an estimate of negative 86 cents per share. Very similar numbers to Lyft. However, they are the bigger company. Lyft has an 8 billion market cap, while Uber has 53. As we can see on the 1 month chart, it's around down negative 1.5. 3 month, it's negative 2. 1 year, it's down around 17. And 5 year, it's down negative 32, while Lyft was down over 50%. So again, why is Uber doing better even though it's in the same industry? Is that they're a little bit more diversified and Uber is a little bit well known more in the community, even though Lyft and Uber are both very strong market cap holders in this sector. There's only two people, it's Uber and Lyft. I believe there will be the duopoly of the future like Airbus and Boeing. So why did Uber fall down again today? It's just due to Lyft's bad earnings. And also one thing to note is that California passed legislation that all ride sharing companies, including Uber and Lyft, have to make their drivers be considered full time employees, including benefits and things of that nature. Uber has commented that if they are not able to win this appeal in the next coming days, they will temporarily stop services in California, which is a huge deal because most of their revenue in the United States comes from California in terms of state perspective. Around 20% of Uber's ride sharing services come from the West, including California. So that's very concerning to me that ride sharing businesses will shut down in a particular state with such high revenue streams from. Personally, I love Uber in terms for the future perspective. Even though it's losing money like crazy, I believe in their business model. I believe 10 years down the line that this is the stock to buy. I have bought at around $20 a share, but at current valuations, I can't justify, even though the uncertainty is still there from California's legislation, it's still not a good buy for me right now. But I believe at $30 a share, you can't go wrong with Uber in the future. I believe this is the next 10x stock right here, Uber. $30, $300 if they play their cards right, which I think they will. They have great management now. Their founders are gone. I believe this is the company for the future. So I like both companies in terms of buying, but of course, I like Uber a little bit more. I believe that people are really underlooking this sector for the future. I believe Uber and Lyft will shine in the coming years. Thank you for watching. I hope you like this video. I'm a little bit more upspring for this video. I hope you enjoy it. Have a great day.